All right, and let's take a look here. Notes to the financial statements. Oh yeah, these are the notes that we had talked about before. So for the year ended December 31st, 2015, unaudited, see notice to reader. So capital assets. Capital assets are recorded at cost with depreciation and amortization provided as follows. Land, nil. Building, 4% minus diminishing balance. The above rates have been utilized to reflect the anticipated life expectancy. In the year of acquisition, only 1/2 the normal rate is applied. The following is a summary of the costs and accumulated amortization of capital assets at the balance sheet date. So if you take a look here, we've got a building with a cost of $3,685,231. Addition is 0. The rate is 6%. The accumulated depreciation here is $617,251. The 2015 net book value is $3,067,980. Go to the land. The cost is $2,249,144. Addition is 0, rate is 0, accumulated depreciation is 0. So the 2015 net book value is $2,249,122. So the total for the building and the land, because we're adding the building 3.6, it's almost 3.7, and the land is 2.2, and it comes out to $5,934,353. Addition 0, you don't apply the rate. So accumulated depreciation is $617,251, and the 2015 net book value is what? It is $5,317,102. All right. So 2, due to shareholders. That's another note. The amount due to shareholders are unsecured, non-interest bearing, and have no specific terms of repayment. 3, loan payable, long-term loan payable to overseas company. The term of the loan is 10 years, commencing September 29th, 2011, and ending September 28th, 2021. Interest payable annually at the rate of 8% per annum and with no principal repayment for the first 5 years of the term. All right, shrink it a bit here. So, activity, which listing contract fee agreement forms do you need to prepare for John and Hillary to sign? So refer to pages 6 and 7 of the workbook for assistance. 2, John and Hillary agree to sign an MLS contract with you. However, one of their neighbors, Dixon, has expressed interest in the property. They have been working on a private deal for a long time, but John is not sure if Dixon is offering top dollar for his property. John wants to make sure that this private deal with Dixon will be exempted from paying commission. What should you specify in the listing contract and also in the MLS data input form, Appendix M, page 102? So 3, based on the statement of loss and deficit on page 53, fill in the income and expenses APOD section below. APOD is found on page 3 of the commercial data input form, Appendix M, page 104. So you can see this sheet here. Complete for multifamily must be properties with 5 or more units. So building type, we've got high rise, 5+ stories, mixed use, low rise 2 to 4 stories, multiplex, 5-plex, mobile home park and condo strata complex. For the building details, the suite mix, we have the types and the number of units. So you would list the number of units here. So bachelor studio, 1, 2, 3, 4 bedroom, the penthouse, other, and then you put the total number of units. Income and expenses, APOD, we have the gross income, you write it there. Other, effective gross, operating expense, the net operating income, and the estimated cap rate. See Realtor remarks for relevant income and expense explanation if necessary. Based on a listing price of $7,280,000, what is the cap rate of the property? 5. If the market comparable cap rate is 4%, what is the market price of the property? 6. Identify points of interest from the balance sheet and statement of loss and deficit on pages 53 and 54. 7. Identify your seller's strengths and weaknesses from the balance sheet and statement of loss and deficit on pages 53 and 54. Case study 2, buyer representative. You sold Peter and Mary their home 2 years ago. Peter is a doctor and Mary is a dentist. They have accumulated an interest portfolio of $30 million in stocks and T-bills. One day Mary calls you to tell you that they want to invest in an apartment building to diversify their portfolio. They want you to be their realtor. You find them an apartment building in Metrotown area from the MLS. Listing brokerage is XYZ Realty. The property has an asking price of $7,280,000. Commission to the cooperating brokerage is 2% of the purchase price. The building has a pet restriction policy and no pets have been allowed since day one. The listing agent provides you with the current balance sheet and statement of loss and deficit for the property. Statement of loss and deficit. For the year ended December 31st, 2015. Revenue, rental income, $414,670, and that's the same as the total revenue. Expenses, so we've got bank charges and interest of $1,023. We've got a business license costed $1,449. Then we got the depreciation, $127,833. We've got the insurance, $10,945. Legal and accounting, $2,509. Loan interest, $158,624. Management fee, $8,763. Miscellaneous, $903. Office supply zeros. Property taxes, $26,238. Repairs and maintenance, $44,260. Salaries and benefits, $26,441. Telephone, $919. Utilities, $7,813. Waste removal, $7,264. WCB expenses, $253. And then so we add all these up, we come out to $488,237. So the balance sheet here as of December 31st, 2015. So the assets, current assets, we've got cash of $128,637. Prepaid expenses and deposits, that's $17,315. So add that 128 plus and 17 plus, and it comes out to $145,952. So we got the property. There's a note below, note 1. Land is worth $2,249,122. The building is $3,685,231. You add the land of 2.2 and the building of 3.6, you get $5.9 million, $5,934,353. So you less or minus the accumulated amortization and depreciation, so that's a minus of $617,251, and it comes out to $5.3 million, basically $5,317,102. Other assets, incorporation cost is $1,288. So you take all these assets, add them together, the total assets are 464,342. So basically it's over $5.4 million. So we've got the liabilities, the share capital, and the deficit. The current liabilities, accounts payable, that comes out to $288,678. The payroll remittance payable, $443, and the deposits received, $15,824. So that all added together becomes $304,945. Long-term liabilities, we've got due to shareholders, note 2, $3,633,982. And the loan payable, note 3, $2,031,600. You add all the long-term liabilities, the due to shareholders and loan payable. 3.6 plus 2 is equal to 5.6. So $5,665,582. Then we have the share capital and deficit. So issued and fully paid 2,000 common shares at 1 cent each. So we've got 20. So the deficit is minus 506,204. And the total becomes minus 506,185. So you have the total liabilities, share capital, and deficit comes out to $5,464,342. So it's basically almost $5.5 million. All right, then we got the financial statements notes for the year December 31st, 2015, unaudited. See notice to reader. Number 1, capital assets. Capital assets are recorded at cost with depreciation and amortization provided as follows. The land is nil, the building is 4% plus diminishing balance. The above rates have been utilized to reflect the anticipated life expectancy. In the year of acquisition, only 1/2 the normal rate is applied. The following is a summary of the costs and accumulated amortization of capital assets at the balance sheet date. So, we've got the building cost, $3,685,231. At 4%, the accumulated depreciation is $617,251. So the 2015 net book value is $3,067,980. The land cost $2,249,122. 0% rate. Accumulated depreciation 0. So the 2015 net book value is $2,249,122. So the total, so you add the building and the land. So the total is $5,934,353 because you're adding 3.6, almost 3.7 for the building. The land is 2.2, so you come out to around 5.9. So the total accumulated depreciation, so it's only on the building, not the land. That's $617,251. So the 2015 net book value of the building and the land, $5,317,102, because you're adding around $3 million for the building, $2.2 million for the land. So 3 plus 2.2. Here in this case, it comes out to 5.3, over 5.3. So second note, due to shareholders. The amounts due to shareholders are unsecured, non-interest bearing, and have no specific terms of repayment. 3, loan payment, long-term loan payable to overseas company. The term of the loan is 10 years, commencing September 29th, 2011, and ending September 28th, 2021. Interest payable annually at the rate of 8% per annum and with no principal repayment for the first 5 years of the term. So, Case Study 2 activity. Number 1. Which listing contract agreement forms do you need to prepare for Peter and Mary to sign to secure your commission? 2. Fill in Part B of the disclosure of remuneration form, assuming the offer price is at full price. So I, your name, am licensed under the Real Estate Services Act, and I disclose to you that my related brokerage, so you put it in, anticipates receiving a commission of, put the commission, from, put who's going to give it, with respect to real estate services provided to you or on your behalf in relation to the subject real estate. 3. In the realtor remarks of the listing, there is a clause that says seller's rights reserved. What is that? What is seller's rights reserved? 4. What is the net operating income, NOI, of the property? 5. What is the market price of the property based on the comparables cap rate of 3.3% in the area? 6. Identify points of interest from the balance sheet and statement of loss and deficit on pages 59 to 60. 7. Identify the seller's strengths and weaknesses from the balance sheet and statement of loss and deficit on pages 59 and 60. 8. This is the first time you have seen the contract of purchase and sale for commercial real estate. Appendix J, page 88. You immediately take a look at the contract of purchase and sale, Appendix K, page 95, that you are more familiar with. Compare and write down the differences between the two contracts. So we have some resources here. Realtors' own resources. The commercial broadcast email service provided by the REBGV Commercial Division, Paragon Commercial, Commercial Edge, BCREA, CREA. Government resources. We have the CMCH, BC Assessment, Cities Planning Department, the GIS, or in Surrey we have Cosmos. BC Online, MyLTSA, Federal Incorporated Company Search. And we have 3 third-party resources, RealNet, listing services like LoopNet and CoStar, and we have the Altus Group Analytics. Commercial brokerages like CBRE, Colliers, Avis Young, Cushman, and Wakefield's Research Reports.